What is good, NIO family? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only NIO stock and what you should be looking out for the future. I'm also going to break down this Wyckoff accumulation schematic and talk about how this actually relates to NIO and what the two different schematics basically are. So we have actually two of them, and which one is more likely to happen to NIO, which one is more likely to represent NIO for the remainder of the year, and what this may mean for the share price of NIO going forward. Now, before I break anything down about NIO and historical trends, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. Not only benefits me, it benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, any of these 12 free stocks can be a free Tesla share or a free NIO share or a free Apple share. It's a limited time offer. The offer ends in just 6 days. Check it out before they run out. With that out of the way, let's get on with the video. So you guys could clearly see there are these two charts right here. These are basically the theory of Wyckoff. And you'll notice that these are just accumulation schematics. So what this means is institutions have a tendency in history, this has been happening for centuries, they push stocks down crazy hard, right? They push them down. And what they do is they go through these different phases where they start to accumulate a lot of these shares. So they push it down like this, they start shorting very hard. And then what they do is they start accumulating down here, they start buying like crazy, then they let it run at the very end, right? This is essentially how they really go about trading. Now, there are two different variations of the pattern. One of them would be the schematic number 1 and schematic number 2. Right here, they're basically exactly the same. That's the first thing to remember. They're almost exactly the same, except there's one difference in phase C. So either when stocks like drop, they reach their bottom during phase B, and then they drop a bit in phase C, but then they start pushing up, or they drop hard in phase B, and they have another major drop in phase C, and then they run up. So everything's the same except for phase C, all right? We either like drop down, we hold and push up, or we drop to a new low and then push up. With that said, we could actually use these to understand what NIO is doing. So Wyckoff tends to not be perfect, but it will give us a good understanding of what may end up playing out. So just to make it like this, we're noticing that the market is taking a bit of a hit. We could get a slight relief bounce for next week, but that doesn't change the fact that more downside does still seem imminent. With that said, let's move the chart like this. Let's go over some of the phases real quick. Then I'm going to talk about the forecast for this year and talk about whether or not NIO may squeeze. So firstly, the first thing to remember though, before I give any predictions, is nobody can make predictions because we don't truly know if there's going to be another war. We don't know what's going on with Taiwan and China. If truly one of them gets invaded, we don't know what's happening with inflation, right? We can't predict all these things perfectly, which is why predictions aren't going to be perfect, but there are many possibilities which are very likely in my opinion, and we're most likely going to see one of them based off what Wyckoff tells us. So just to show you guys, we'll notice that NIO hit its all-time high last year, not this year, last year. NIO pushed up really hard, and since then, many small to mid-cap starts take hits, and NIO was declining for quite a bit of time. But it was actually holding up for most of 2021. It wasn't necessarily like tanking the way it did this year, and you could see the whole market was basically taking hits like this. Now, during this drop, we could actually begin to notice how Wyckoff actually relates. So to start us off, NIO came tumbling down, right? We got a big bounce. Notice how the volume increased. This would be preliminary support similar to this right here. Then what happens is we push up, we come down very hard, leading us to the selling climax. And you guys can see what happened to NIO. Big volume push, we push up, we come crashing down to the selling climax. This is where we have support. And you'll notice that after that, we got a big push up right here. This is the automatic reaction. It's kind of like condensed, which really shows that sometimes these charts could be kind of like compressed together. Sometimes they're more stretched out when going through these phases. But NIO quickly had an automatic reaction, big volume spike, followed by a big drop, lots of selling pressure leading to the sell test in phase A, followed by a big rally starting off phase B. So what happens after phase B starts? We have a new spike, just like right here. NIO has the spike, and then we crash to a new low. See this new low right here? That's exactly what happened to NIO. Big crash to a new low. So that seems pretty crazy to a lot of people how this chart basically represents the price action of NIO so well, at least so far. And what happened after the low came? This would be the sell test in phase B, just like that right over here. And then what happened was NIO starts to slowly rally to the upside, approaching the month of June, near the end of June, just like this phase B part. Then after that, NIO started declining a bit, showing some strength, pushed up a little bit, and it came down. Now, here's where things become very confusing. We don't know if we're truly going to see a last point of support. And in order for us to really determine that, NIO has to hold one of these levels. So maybe that 15, 16 range really has to hold. We got to get a nice bounce off of that. And that would suggest that we may be actually respecting this. Now, sometimes these phases could be stretched out and we may not even know what was coming ahead of us. So just to show you guys this, another possibility, the more bearish possibility, would be the other variation, the other version of this Wyckoff. That would be us dropping down a little bit later. So will NIO end up like coming tumbling down to a new low? As of right now, it seems very unlikely. It seems more likely that NIO is not going to see like a spring than a test. You know how this is like the new low? It's very unlikely, in my opinion, NIO is going to come all the way back down to like the 11s or 10s. It looks more likely like we're going to see a move kind of like this. Now, I could be wrong because it depends on global situations, right? If we do see Taiwan get invaded, that would not be good. And that could be a catalyst to cause the other schematic. So let me go over the possibilities now, just to make this as clear as possible. One thing I can constantly remind you guys about is the fact that even though SPY is dumping right now, this is what happens historically during midterm elections. What tends to happen is the market crashes in September. As we approach the end of September, we start to kind of like bottom, kind of like trade sideways. As we approach October, we start to trade sideways again. And by the second week or so, we start pushing up and we get a big rally by the third and fourth weeks of October as we approach the midterm elections. That's what tends to happen. So far, what is the market doing? We're crashing. You're seeing SPY drop really hard, but SPY is dropping like very close to its previous low, and yet NIO is not crashing. So it makes me think that we're more likely to respect uh, the the second schematic where we don't see a new low in phase C. So with that said, let's just go over this possibility. Let's assume, all right, let's assume that China doesn't actually invade. Let's assume that things don't go as bad as some people thought they would. Let's assume that inflation starts to come down near the end of the year and we do get that midterm cycle. These two lines right here would be the midterms. See these two white lines, these vertical lines? So what could happen to NIO is next week, we get somewhat of a push up, slight push up, NIO pushes back up, we get another dump, but NIO actually holds 17 to 16. We hold the 17 to 16s. We don't see a massive crash for the first week of October. We kind of like bottom out here. Then midterms approach, and then boom, we get a big move to the upside just like this, right? A big move like that. Both of these are very much possible. And I do think they're very likely based off historical data. NIO could get a rally back up to the 20s or low 20s, depending on how things go. Now, with that said, one question that I have is what is going to happen after that? If we're following this schematic, what comes next would be the last point of support, which is at a higher range relative to the last sign of strength. Then after that, we get a big push to the upside. The sign of strength comes. Another last point of support. We fight resistance and then we push up to phase E where we start to rally. If we see a squeeze at the end of the year, that could be what ends up happening. So just to draw this out, and I'm going to draw different situations, guys. I can't just show one situation and be biased like that. So we're going to go over a more bullish possibility for the end of the year. So what happens is after the midterm elections, market pushes up, NIO pushes up like this, get a slight rejection, and then finally, as we approach, I don't know, November, we do have FOMC, so maybe the market drops a bit, but then NIO pushes up after that. It holds up pretty well, and we push up to, excuse me, we basically push up to the sign of strength as we approach December. What happens is we get another rejection, come down like this, and by the end of the year, we get a huge rally and we start to push just like this. And NIO pushes all the way up to the high 20s up until like the 30s. We kind of continue from here. The year goes on. We have big catalysts. We have NIO Day, new models, and NIO just soars to the moon as time goes on, all the way back to this very big chop zone. So, anyways, that would be a more bullish possibility. And that is assuming inflation starts to come down as the year ends. We don't get a big invasion. Now, what if we do get some sort of like invasion, something else happens that we don't anticipate? Well, I went over schematic number 2. Let's put that aside and bring in schematic number 1. All right. Schematic number 1 suggests a move like this could happen, where we actually start to dump a bit. So what could be happening is if we are actually going to see schematic number 1, if this is what's going to happen, guys, if there is an invasion, bad things happen that we don't expect, and the market crashes like really hard, inflation doesn't come down like quickly, that could be bad for NIO stock. And we could actually see something like this happen, meaning NIO could make new lows, unfortunately. Do I think it's probable? No. I think it's actually very unlikely this happens, but it is a possibility. And everyone has to be prepared for this. So the more bearish possibility would be this is kind of like a fake out. Even the run up we get around midterms is another fake out. And the whole market, if we do get a crash like after November, after the midterms, maybe a country's waiting until after midterms to invade. Notice how there's a downtrend right here. You could argue that right here we could respect the downtrend for some time. So a more bearish possibility would be after midterms, right here, midterms come, and then the market ends up crashing. I'm going to change the color to make this easier to see. So what would happen is this LPS would not actually be there. So we would ignore this in the second possibility. And NIO would end up just doing this. We get a huge dump near the end of the year, like this. If there's a big invasion, something like that happens, and we come all the way down here, right? But after that, the recovery starts. We have the spring, the test, nice push up, last point of support, followed by the big rally to the sign of strength early next year, followed by moves like this. Phase E comes, and then NIO kind of like recovers like super quickly. It kind of like squeezes, right? And it's going to happen early next year. Now, next year, I do anticipate the Fed to kind of bounce between they may even bounce between quantitative tightening and easing. So could actually come out kind of different. But this would be like a way more bearish possibility, which is still possible because sometimes unexpected things happen in the world that the markets will not like. So just to make this clear, I'm not saying that this will happen. What I am saying is Wyckoff suggests it's a possibility, but if we put these aside, the red line you're seeing here, I think this is a lot more likely. We're more likely to see this. The red possibility where we just start to recover, we start pushing up. I think this is a lot less likely, but then again, there are external things we may not really know that may end up happening. So I don't want to be like a person spreading FUD and saying, oh, the market's going to crash. I'm not saying this will happen. be prepared for it in case something like this does happen to the markets. But other than that, I find it more likely that we get a nice bounce and we start to see a big push to the upside, just like this. So the red line, I'm saying this is most likely what's going to happen. NIO is going to get a big recovery going into the end of the year. I really believe that, as long as we don't see something really bad happen near the end of the year, guys. And that's how I feel. So, anyways, thank you all so much for listening. Please have an absolutely spectacular rest of the day and weekend. It's very important to go over both the super bearish and super bullish possibilities. I, once again, think the red line is way more likely to happen. So remain calm, cool, and collected. Do what you have to do, and I'll see you guys in the next one. NIO to the moon, because the long-term future is bright, and peace out.